Good afternoon. Today I am going to cover some of the latest trends in the U.S. beef and pork markets with a focus on how strong demand, both domestic and international, is supporting prices even as production was higher to start the year. Like many who watch the U.S. market, you might be surprised about the higher beef and pork prices since the beginning of this year, even as COVID-related restrictions remain in many places in the states. We have received many questions about higher prices, and the answer is demand, demand, demand. Demand at U.S. retail has been massive as consumers continue to purchase large volumes of meat, whether for convenient items like sausages, comfort or familiar foods like pork chops and beef roasts, or for luxurious treats like steaks or ribs. On the food service side, quick service restaurant business rebounded relatively quickly after the onset of the pandemic, due to the prevalence of drive-thrus and takeaways already set up in the U.S. And this benefited processed pork items like bacon and, of course, burgers. Full-service restaurant demand remains sluggish, but there is optimism for the second half of this year with warmer weather to allow outdoor seating again, and as the vaccine rollout continues. And of course, export demand has also been supporting prices, with record pork exports in 2020 and a strong rebound in beef exports in the fourth quarter of last year, and the momentum has continued to start this year. Vaccine progress, with over 18% of the U.S. population already receiving at least one dose, and future stimulus payments will continue to support demand. Despite this positive momentum, there are various challenges for U.S. beef and pork markets, and I am just listing a few here to consider, including port congestion and other logistics issues, limited labor in the U.S., and higher feed prices and other input prices. The tight labor supply has been exacerbated by the pandemic, and this means tighter availability for some boneless, variety meat, and value-added items, but more availability for bone-in products. So let's start by talking about the feed price situation. U.S. corn and soybean production rebounded in marketing year 2020-21 after decreasing in marketing year 2019-2020. 2020-2021 corn production is estimated up 4% to 14.182 billion bushels, and this is the fifth highest annual production. Soybean production is estimated up 16% to 4.135 billion bushels, the fourth highest annual production. The U.S. accounts for nearly a third of both global soybean and corn production and is the top corn producer, while Brazil is the top soybean producer. Brazil's production for both corn and soybeans is expected to be record large in 2020-2021, with corn production up 7% and soybean production up 4%. So even though production has rebounded, record exports are driving U.S. corn and soybean prices higher. With record exports, U.S. ending stocks are expected to be the lowest since 2013-2014 for both corn and soybeans, leading to higher prices and tightening supplies available for domestic feed use and crushings. U.S. corn and soybean prices have been increasing since last summer, and for 2020-2021, USDA is forecasting average annual prices at the highest level since 2013-2014 at $4.30 per bushel for corn, up 21% year over year, and at $11.15 per bushel for soybeans, which would be up 30%. USDA's March forecast put both U.S. corn and soybean exports at record levels in 2020-2021. Corn exports are forecast at 2.6 billion bushels, or 66 million metric tons, up 46%, with soybeans at 2.25 billion bushels, or 61 million metric tons, up 34%, due to demand from China. The weekly export data from USDA FAS showed corn exports up 82% year over year, and soybean exports up 78% for the 2020-2021 marketing year through February 25th, all driven by growth from China. So there is room in USDA's forecast and prices to be revised higher, but higher feed costs do not necessarily mean lower meat production. And as we will discuss shortly, U.S. red meat production is expected to be record large in 2021. The latest quarterly hogs and pigs report from USDA showed that the total inventory of hogs was down 0.9% from the previous year on December 1st, while the market hog inventory was down 0.7%. Both the total hog and market hog inventories were the second highest on record for December after 2019. After increasing since 2014, the December breeding herd inventory was down 3% from the previous year. But apart from 2018 and 2019, the breeding inventory was still at the highest level since the 1990s. The decrease in the breeding herd largely reflects the supply chain challenges in 2020 and the uncertainty around demand due to the pandemic in 2021 and as feed prices increase. Even with the breeding herd decrease, heavier carcass weights in the first half of 2021 and higher expected numbers of pigs per litter are expected to boost production. Hog prices have moved sharply higher since the beginning of the year, and for the first week of March, we're up 51% from last year. Futures are anticipating higher prices through 2021 on expectations of continued strong domestic demand, as well as continued large exports to China. With higher hog prices since the last quarterly hogs and pigs report from USDA, we could see plans for expansion in the next report later this month because of an improved profitability outlook. The January cattle inventory report showed that total cattle and calves decreased slightly for the second year in 2021, as expected. On January 1, beef cows were down 0.6% from last year, but heifers held back to be beef cow replacements were up 0.1% after 3 years of decreases. The cattle inventory report also showed a record number of cattle on feed in all feedlots at 14.7 million head on January 1, up 0.3% from last year. This chart shows the decrease in the cattle herd since 2020 has been very moderate, with the January 1, 2021 cattle herd down just 1.3% from the 2019 cycle high of 94.8 million head. So even though there is the challenge of higher feed prices, the USDA hog and cattle inventory reports show us the supply of animals that are already on the ground. And with that, USDA is expecting record large red meat production again in 2021. Despite the disruptions from the pandemic, production for the three main species was record large in the U.S. in 2020, with pork production up 2.4%, poultry up 1.1%, and beef steady with the 2019 record. It was the sixth consecutive year of record large pork production and the eighth consecutive year of record large poultry production. USDA is forecasting 2021 pork production up 1.3%, beef up 1.6%, and poultry up 0.2%. At those levels of growth, the increases in pork and poultry production volume would be the smallest in recent years in 2021. 2021 beef production growth is expected to be the highest since 2018 after production held steady with the 2019 record last year. For domestic per capita disappearance, U.S. beef per capita disappearance is expected to tighten in 2021 for the first time since 2015 on larger exports and smaller imports. On the pork side, continued record U.S. pork exports are essential to keep U.S. pork per capita disappearance below recent highs. And per capita poultry disappearance is expected to decrease in 2021 for the first time since 2012 as production growth slows. Let's take a closer look at pork production. USDA is expecting 2021 pork production to be up 1.3% year over year to a record 13 million metric tons. This would be a 4% increase from 2 years ago and a 15% increase from just 5 years ago. Despite this significant growth in pork production, the U.S. continues to export larger shares of total pork production, with exports accounting for a record high of 26.5% of muscle cut production in 2020. USDA expects production in the first half of the year to be up 2.8% year over year because of the increase in second quarter production compared to last year's COVID-related disruptions. Production is expected to be steady year over year during the third and fourth quarters. Looking at quarterly production in a different way, we can see pork production increased compared to the previous year for all quarters since 2015, until the COVID-related disruptions in Q2 of 2020. 2021 will be the first time, apart from those disruptions, where quarterly growth will be flat in Q3 and Q4. Hog slaughter levels fully rebounded from COVID-related disruptions last June, and for the year, 2020 slaughter was up 0.8%. Year-to-date, 2021 slaughter is up 2%, and the dip in mid-February was a temporary disruption from winter storms. Pork production is also higher to start the year on heavier carcass weights, although carcass weights declined from 202 pounds at the beginning of the year to 215 pounds in mid-February. Weights remained higher year over year. Now let's look at beef production. U.S. beef production was record large in 2018, following sharp growth since 2016. And 2019 production held steady with that record. USDA is expecting 2021 production to be up 1.6% to a new record of 12.5 million metric tons. Beef production is not expected to vary much between quarters in 2021, although second quarter production is expected to be the highest instead of the usual peak in the fourth quarter. During the first half of 2021, production is expected to be up 7.1% from last year, but during the second half of the year, production is expected to decrease by 3.5%. And now showing the change in quarterly production year over year again, beef production has been higher compared to the previous year for all but one quarter since 2016, until the pandemic disruptions in Q2 of last year. Like hog slaughter, cattle slaughter rebounded last June after the COVID-related disruptions. Slaughter levels were up 6% year over year for the last 2 weeks of data, following the temporary slaughter disruptions in mid-February from winter storms. Steer weights dipped to 909 pounds in late February, down from 919 pounds in the first half of February, and the lowest since August, although weights remained higher year over year. The trend of producing higher quality beef continued in 2020. Last year, total fed beef production was down just 0.3% year over year, as heavier fed cattle weights offset the 3.4% decrease in steer and heifer slaughter. In 2020, the share of fed beef production grading choice and prime reached new records. So despite the overall slight decrease in fed beef production, choice beef production growth was the highest since 2017, and prime beef production growth was the second highest overall after 2018. Choice production was up 3.7%, upper two-thirds choice production was up 4.8%, and prime beef production was up 20% in 2020, as select beef production continued to decrease. And so, with those higher grading percentages for choice and prime production, total choice and prime beef production was record large in 2020, up 5% from the previous year and up 28% from 2015. This trend has continued this year, and through February, 10.6% of fed beef production graded prime, up from 9.5% last year. 73.7% graded choice, up from 73.5% last year, and 32.2% graded upper two-thirds choice, up from 31.6% last year. The percentage of fed beef production that graded prime was over 11% during the last 2 weeks of February and was around 74% for choice, despite the severe winter weather conditions and storms at that time. The latest cattle on feed data shows us that supplies of cattle on feed remain large. In February, the total inventory of cattle on feed was 12.1 million head, up 1.5% from last year. The supply of cattle that had been on feed for over 120 days totaled 4.4 million head, up 14% from last year. The number of cattle on feed over 120 days signify cattle that are ready to be slaughtered within the next few months. Thus, why USDA is expecting large production in the second quarter of this year. That large supply of slaughter-ready cattle on feedlots is pressuring live cattle futures prices. But a strong grilling season is expected, along with a rebound in food service demand, which is supportive for spring and summer. The U.S. Census Bureau released the final numbers for retail and food service sales in December. In December, grocery store sales were up 10% from last year, while food service and drinking place sales were down 21%. After dropping down 53% year over year in April, food service sales had recovered to the highest level compared to last year in September and October, with sales down 14% and 13% respectively. But sales slowed in November, down 19%, and December sales were down the most compared to last year since June, when sales were down 23%. For the year, grocery store sales totaled $760 billion, up 11% from $683 billion in 2019, with food service and drinking place sales at $617 billion, down 19.5% from $766 billion in 2019. Limited service restaurant sales dropped below year-ago levels from March through August, but were up 3% from 2019 in September and up 4% in October. In November, sales were down 1% year over year, but were again above year-ago levels in December, up 1%. The January to December total for limited service restaurants was $341 billion, down just 4% year over year. Full-service restaurant sales have been below year-ago levels since March. October sales were down 17% from 2019, the closest to year-ago levels since the start of the pandemic. But in November, full-service restaurant sales were down 27% from 2019. And in December, sales were down 35% as restrictions increased amid the third wave and as colder weather limited outdoor dining. For the year, full-service restaurant sales totaled $224 billion, down 29% year over year. Restrictions on indoor dining vary by state, and some states still have restrictions in place. There is optimism for food service recovery later this year, and increased buying from food service accounts in February supported beef and pork prices. U.S. consumer purchases at the meat case have maintained momentum since the start of the pandemic, and pork retail sales volume was up 16% for the year ending November 2020. Sales were higher across all categories. Sales surged for convenient pork items like sausages, bacon, and ham, as well as for fresh pork items like loins, pork chops, and ribs, as consumers bought more of those popular and familiar items to cook at home. Beef retail sales volume was up 11% in 2020. Also with growth across all categories. Steaks and ground beef accounted for about 75% of the growth in beef retail volume last year. There was a massive growth for steak sales at retail as full-service restaurants were hit by COVID-related restrictions and as consumers sought to enjoy affordable luxuries at home as their entertainment expenses dropped off during the pandemic. Notably, ribeyes, already a major retail item, saw sales increase by 27% during 2020 and accounted for 10% of the total beef volume sales growth at retail for that year. Ribeyes, strip steaks, and T-bone steaks were already sold in larger volumes through retail than through food service before the pandemic, but tenderloins are predominantly food service item. Along with retail and food service demand, tight cold storage stocks are also supporting pork prices. Cold storage stocks of pork were down between 21% and 25% from the previous 5-year average from May 2020 through January 2021. Even with production fully rebounding since last June, users were not able to refill the pipeline as strong demand pulled product for retail and export. On January 31, Frozen cold storage stocks remain significantly below the previous 5-year average for bellies, which were down 36%, bone-in hams down 43%, boneless hams down 13%, bone-in loins down 31%, butts down 17%, and ribs down 25%. Export momentum also continues to support prices. Pork and variety meat exports were record large in 2020 at 2.977 million metric tons, up 11% from the previous record set in 2019, and accounting for 29.3% of pork and variety meat production, up from 26.9% in 2019. China dominated the volume growth for pork, but there was also growth to other markets, including the ASEAN, Japan, Canada, Central America, and the Dominican Republic. In preliminary forecasts, USMEF was expecting exports to China to ease in 2020, but is forecasting further export growth in 2021, primarily driven by continued rebound to Mexico, but also on growth to a wide range of markets. 2020 total beef and variety meat exports were 1.255 million metric tons, down 5% year over year, with beef muscle cut exports down only 2%. China was also the top growth market for beef, followed by Canada and Africa. Beef exports slowed in the summer due to COVID-related disruptions and lockdowns halting tourism and food service, but exports were again above year-ago levels in the fourth quarter, driven by a rebound to Mexico and Asia, with fourth quarter beef muscle cut exports up 10% year over year, and combined beef and beef variety meat exports up 4.5%. The recent weekly export data shows exports to Asia and Mexico have gained further momentum, and China and Korea were the top growth markets in January 2021. The pork cutout moved counter-seasonally higher from late January into March due to the strong demand factors we just discussed, even with larger year-over-year production in the first 6 weeks of the year. For the first week of March, the cutout averaged 93 cents per pound, up 41% from last year. This chart is showing the pork primal values with monthly averages for October, January, and February, along with the latest week of data compared to the previous week and to the same week last year. I included the averages for October because prices also ran up counter-seasonally that month due to strong demand. All primal values are higher than last year, but the belly primal is contributing the highest change in value. Bacon is the top item sold at food service, and it accounts for about 1/3 of all pork sold at food service, and it is also a top item at retail. QSR chains were able to adjust to the pandemic quickly, and even though some breakfast commute business slowed as work from home increased, QSR restaurants serve more meals at different times of the day, and this continues to provide strong demand for bacon. The choice beef cutout also moved counter-seasonally higher through January and February before starting to decrease slightly the first week of March to $2.34 per pound, up 13% from last year. Retailers are expecting a strong grilling season this year as consumers continue to have more money to spend on food at retail, as well as continue to gather outdoors and in small groups, which is perfect for family grilling and for barbecue. The grilling season will start to provide momentum for the cutout again in April and May. And here's the chart showing the choice beef primal value trends. For the first week of March, the choice rib, loin, chuck, and round primals remain significantly higher year over year. And these primals are more exposed to retail compared to briskets, flanks, and short plates. So to sum up, on this slide I included USDA's latest forecast from the March WASDE report for your reference. As we continue to look ahead at what we expect for the rest of 2021, here are a few thoughts. Feed costs are higher, and the December hog inventory and January cattle inventory showed slight decreases. But USDA is expecting continued record large meat production in 2021. However, supplies will be relatively tighter in the second half of the year for both beef and pork. Continued strong retail demand, an expected rebound in food service, and strong exports are all supporting beef and pork prices. And tighter cold storage stocks are also supportive for pork. The tight labor supply has been exacerbated by the pandemic, and this means tighter availability for some boneless, variety meat, and value-added items, but more availability of bone-in product. However, the vaccine rollout might help alleviate the labor limitations to some degree. And with that, I will wrap up the presentation. As always, it is a pleasure to have the opportunity to speak with you. Thank you for your time and your attention today.